Welcome to Accenture's Insurance News Analysis. I'm Abby Compton, here in the studio with Cindy D'Armond, Accenture's North America Insurance Lead. Cindy, welcome.
Thank you.
And joining me, as always, Kenneth Saldana, Accenture's Global Lead for Insurance. Welcome, Kenneth.
Thank you, Abby. Cindy, great to have you here.
Great to see you, Ken.
So I've got a few great stories to talk about. So our first story, long-term care insurance is increasingly being taken up by the states. We saw that Washington State just launched their public option. California, Missouri might be not far behind. So what do you see happening? What does this mean for the long-term care products the industry has traditionally offered? Cindy, what do you think?
Well, I think it's a great question, and I think it's really interesting those states are picking it up, and I'm sure many more will follow. It'll be complicated to figure out how to administer all that, but I'm sure we can come back to that in a second. When you look at what the long-term care products offer today, they're great products, but they're complicated and they're expensive, and not a lot of carriers are even providing them today. So it's hard to access, right, for the general public, and it's a great need. It's a social crisis to some degree in that many are left without long-term care insurance, believing they have some coverage through Medicare or Medicaid, and finding out they really have to exhaust all of their assets before you can get any long-term care coverage through Medicaid, and it's very limited. So most people go without, and it's unfortunate. So I think the states, if we can find a way to actually make it happen, through an ecosystem of partners and through other carriers and data sharing across states, because people don't live in the same state forever, which will probably open up a whole other dialogue about information sharing across borders and how that's going to work if the benefits follow you and not just your pay in the state. So I think it's a complicated situation, but it's interesting to see how the states are going to follow and how fast they follow and how much of a burden it does take off of their own state aid programs.
And I think it's actually a continuation of a trend, Abby, of just states having to step in as the underwriter of last resort. Long-term care is certainly one of my things, Cindy, as you said. There's an underlying social crisis here. So look at the aging population. You look at the medical inflation that's been outstripping consumer inflation by double digits for 20 years now. So the same sort of crisis we're seeing in property, right, is playing out in long-term care as well. In property, we've got completely changed loss patterns. You've got carriers who are, just like in long-term care, starting to say they can no longer write in certain states. They can no longer offer property coverage. It is going to create a social crisis for the states in question. So I think we're seeing in general states having to step in as an underwriter of last resort for these situations where the underlying problem isn't going away. What's essentially happening is whether it's insurers who are no longer writing property coverage or insurers who have said, I'm no longer writing long-term care insurance and I'm going to treat this as a closed block of business and just manage down the claims. I think we're going to continue to see states stepping in because they're going to face the issue with whether it's, places that are going to be under severe economic attack if you can't find property insurance, or you're going to find populations that are aging and exposed and underserved because you don't have long-term care for them.
Colorado State and NOAA are predicting that we'll see between 12 and 17 named storms this season and anywhere from 1 to 4 major hurricanes. So looking ahead, looking back maybe at what we saw with Hurricane Ian, what are we seeing now? What do we think the lessons learned were? What are insurers doing to prepare for this, not only for their customers, but for their own businesses as well?
So I think this is one where, everything you do is not enough, right? I think as we look at what insurers have done to step into these situations, beginning all the way from much more risk mitigation efforts where you can actually reach, where you've got insurers reaching out to customers, whether they're commercial or personal, reaching out to provide the warnings, suggestions on where to move your vehicles, how to, make sure that your windows are boarded, all of those things, right? Which have been on the steep increase in the last few years, again, aided by the fact that most insurance is moving to a higher interaction model as opposed to the once-a-year event, right? So I do think that property insurers in particular in this situation have been doing a lot more. The challenge I think we're going to face is that, as you can see from the predictions that are coming through from NOAA, et cetera, is that the actual climate change is driving a severity pattern that is very hard to prepare for. And every year, right, I think we're done with being unprecedented because now clearly everything's precedented, right? Because, and so we keep having these new records hit. I mean, this summer we hit hottest days in the history of the world, right? And so I think the fact that the severity and the scale of these climate issues and the hurricanes and the losses from that continue to climb, it's going to make it a real treadmill, I think, for insurers who are going to keep running to try to keep pace with this. I'm just not sure they can.
No, I agree. I mean, we're either melting or we're burning for a wildfire or we're being hit by hurricanes or something, and they're coming at us consistently, right? And like you said, the severity is getting greater and greater. We don't see that changing. I do think what's interesting, though, is making sure that carriers are clear on what coverages they've been providing, because as these storms have increased and the severity's increased, they're clearly forced in some way to limit, reduce, manage coverage, whether it's a named storm deductible or it's capped replacement cost or some form of replacement cost. That, as us consumers, we need to understand what's available and what we actually have, making sure you understand what's in your policy and making sure you understand that the difference between wind and flood, and do you have both? And if not, what are you going to do about it and how do you plan for it? And so that's important for the consumers to know, but important that the carriers are communicating what's actually happening so we don't have another crisis where not only was coverage limited because they need to, but nobody even knew about it. And then who brings flood insurance to the areas that have never flooded before?
Yeah.
Now we have that whole new crisis as well. So, I mean, I think it's this constant evolution. I mean, carriers, I think, are getting better at increasing limits on policies due to inflation and due to increased replacement cost, et cetera. So that's helping some. Rate increases are going up, but sometimes pulling out of the state's the only option they have if they can't get the rates they need to affordably run a business in these states.
It's very much back to the long-term care property. It's the last resort, right? On the underwriter of last resort, the coverage of last resort. And I think at least we've already seen that playing out in Florida and California. I think it's going to keep going. But in terms of, responsiveness to the situation, I think, again, everything that the carriers do, everything that the states do, I think will be helpful. But I think the scale and pace at which we're seeing these events come at us just keeps outpacing anything that we're doing to respond. So we are just facing a much more difficult time. And with all of the customers out there, with all of the households out there, I think this is fueling that sense of risk and uncertainty and the desire for protection broadly. Right? Mm-hmm. And I think, Cindy, you're exactly right. Virtually nobody looks at their policy and understands, wind versus flood and all of these nuances, which are not nuances to people who are in the insurance industry. They're major red flags and big, very clear issues around coverage. But for the average consumer, there's no sense of am I protected? Is the very simple question that most consumers ask. And I think you're right. There's whether or not we're actually doing all that's possible on mitigation, et cetera, the underlying education of understanding what it is that you have and what is it you don't have. Yeah. And again, I'll go back to our first conversation, whether that's about your long-term care and your health and your mental wellness and all of those kinds of coverages, or it's on your home and whether you have wind and water. One of the things that I think would be probably very helpful, along with all of the efforts from carriers and from the state, is just a real drive to have consumers understand where are they exposed, are they underinsured, do they have the right coverage in place? Because that preparedness also goes a long way to saying, how do you respond when something does actually happen?
Yeah, it seems like there needs to be, it's a great opportunity for a lot of collaboration between homeowners, insurance carriers, states, and regulators to be talking about what does it take to keep people safe from a risk mitigation perspective, protect their assets, and what's required for insurance companies to remain in business to be able to provide insurance in states so that it doesn't always go back to the state as a last resort. Yeah. Because I don't know that that's always a good option either.
It won't be for very long.
Exactly.
So,
well, let's talk about the data that drives all of this. So there are states that are looking at the data points insurers can use to inform their algorithms, and there's some proposed limitations on that, with states concerned about potential unintended consequences or discrimination. So, what are your thoughts on unintended consequences?
So I think it's interesting. So we were, think about it. It wasn't too many years ago, like credit score was considered new, right? And now it's considered, is that non-traditional? And some states are saying, should we even be allowing it? And some states have already stopped allowing credit score. So a lot of companies have said credit score is an indicator of risk behavior and likely amount of severity of loss. So that's a single data point that's kind of had its churn through almost all states. If you think about now where we are with AI and what's available and Gen AI and all of the fintechs, insurtechs, and all of the massive amounts of data that's available, we like it when it helps us reduce our premium. We don't like it when it helps an insurance company charge more money for their insurance, right? So it is this balance that I think we have to figure out. Like, how do we make sure that insurance companies are clearly modeling how they're going to use the data and able to articulate the implications of the use of the data, and for consumers to understand this data is available. Somebody's using it somewhere. And like, let's not forget, we love when we register that we have, we're non-smokers and we don't drink and we exercise for a discount in our health policy. But if somebody else is using that data, that same source of data for another part of our insurance, we're kind of cause concern. Somebody's reading my social media profile to find out that somebody's talking about depression or anxiety and using that to say, do you know you have benefits we can provide help and support through from your health insurance provider? Those are all great. When I use it in a different way, it's not. So I think with the massive amounts of data that are available, it's really all about the structured way in which carriers can prove they're using the data, managing the lineage of the data, that it stayed from one source all the way through and wasn't modified by additional third-party data sources, right? To prove how you're going to use it in the implications. I think it's not going away. It's going to continue to increase. And it's actually to our benefit in most cases. This data is helping insurance companies predict trends and losses and risks that they can also help us mitigate. So I think we just got to think about it and how do we use it responsibly? Well, that's my perspective, Kenneth.
No, I agree. And I think the fact is, anytime you bring something innovative into market, it is by definition non-traditional, right? And so if we want insurance products to evolve towards protection, we want to be able to do more personalized offers. We want usage and behavior-based offers in market, which is what everything we see in our consumer survey, et cetera, pushes towards saying consumers don't see the value of traditional products the way they were defined. They want more of this usage behavior. And we've also seen in our research that, to your point, Cindy, they trust insurers to use the data as long as they have full awareness of it, right? And they don't want it used in ways that they're not aware of, right? I also think this is a continuation of, in some ways, being innovative actually keeps us away from some very bad consequences of only staying with traditional data elements, right? I mean, the industry for years underwrote on very traditional data elements, and we decided that was redlining, and we didn't want that in place. So that was a usage of traditional data elements in place for a long time. And in fact, it took non-traditional data elements to say, wait a minute, we have to consider other elements here and other risk and pricing factors to be able to actually provide coverage to some of these populations that are currently being underserved and fundamentally discriminated against in terms of what they can purchase in insurance. So to me, the move as insurers, and I do agree, Cindy, this is going to keep moving. It's going to keep happening. And from all we can tell, the pace at which it's going to keep happening is going to accelerate, right? And so every time that happens, I think it's a good thing in that it actually allows us or forces us to test the traditional assumptions and the traditional models we've got in place. It absolutely comes with the requirement, as we've seen with most boards and for insurance companies. I would imagine every company out there, boards are concerned about ethical use of AI, ethical use of data, their governance responsibilities around how they're going to manage this at the organization, because there is a definite check and balance that we see from insurance, from from organizations in insurance and at the board level, saying, are we discharging our governance duties correctly on this, so that yes, there might be a real push in the transactional business to use these factors and to use these models. And there's clearly a need to think about governance and data privacy and ethics in that transactional flow of the business. But I think we're seeing insurance boards raise this issue to say we have a governance responsibility over and above the transactional one, right? So I think, again, clearly I'm biased on this, but I think the industry is very aware of this issue. I think they're proactive on this issue, both transactionally and at the board governance level. It's not going to go away for sure. But I do think that the industry is doing a lot to address it the right way. Will there be some stumbles along the way? Unfortunately, I'm guessing yes. But that doesn't take away from the fact that there's a very deliberate effort to do this the right way.
Makes sense. I mean, I think the sophistication that's going to be required with the regulators to be able to process and manage and understand the new models that are coming forward is going to be significant. And the burden is going to be on the carriers to be able to explain how they're using the data and make sure it ties to their responsible programs, right?
Correct.
All right. Well, thank you both for a great discussion. Cindy, always a pleasure to have you join us.
Super happy. Thanks.
And Kenneth, love hearing everything you have to say about the industry. Always. Thanks for coming on.
As usual. Thank you for bringing some change to the, Abby's usual boring guests on this speech. So thank you again, Cindy.
Glad I could help.
And thank you for joining us for Insurance News Analysis. We'll see you next time.